What if I told you that the so-called digital gold just lost a quarter of its value while actual gold hit record highs? Right now, as you're watching this, billions of dollars are moving, and the direction might shock you. See, something strange is happening in the financial world, something that has veteran investors scratching their heads. Bitcoin, the asset that was supposed to replace everything, is bleeding out, 25% down. Meanwhile, gold and stocks are catching every single dollar that's running away from crypto. And here's the thing, this isn't just about numbers on a screen. This is about your money, your future, your retirement, and whether you're on the right side of what's coming next. If you care about building real wealth, hit that subscribe button right now. Tap the notification bell too, because the videos we drop here could literally change how you think about money. And trust me, by the end of this one, you'll understand exactly why millions of investors are making moves that most people won't see coming until it's too late. Stick with me here. This gets wild. Let me take you back to where this all started. It was late 2024. Bitcoin had just crossed $100,000. People were celebrating in the streets. Crypto influencers were buying Lamborghinis. Everyone and their grandmother was throwing money into Bitcoin like it was a guaranteed ticket to financial freedom. The energy was electric. Social media was flooded with screenshots of massive gains. Diamond hands this, moon mission that. It felt like the party would never end. But here's what nobody was talking about. While everyone was high-fiving each other, the smart money was already looking at the exits. The whales, those massive holders with thousands of Bitcoin, were quietly moving their coins, not buying more, moving them to exchanges. And if you know anything about crypto, you know what that usually means. They weren't preparing for liftoff, they were preparing for landing. Fast forward to now. Bitcoin has dropped from its peak near $109,000 all the way down to the low 80s. That's a 25% crash. 25%. Let that sink in. If you had $100,000 in Bitcoin at the top, you'd be looking at about 75,000 now. Poof, 25 grand gone. And for a lot of people who went all in near the top, the pain is even worse. But here's where it gets really interesting. Where did all that money go? Because money doesn't just disappear, it moves. And when you follow the trail, you'll find something fascinating. Gold is hitting all-time highs. The stock market is holding strong. Institutional money is rotating. And the question everyone should be asking is simple. Why? Let me break this down for you, and pay close attention here because this next part could save you from making a massive mistake. The Federal Reserve has been playing games with interest rates. They raised them aggressively to fight inflation. Then they hinted at cuts. Then they pulled back. It's been a roller coaster. And what most people don't realize is that Bitcoin doesn't exist in a vacuum. It's deeply connected to liquidity. When money is cheap and flowing freely, risky assets like crypto go up. When money gets tight, when borrowing costs increase, when the Fed gets hawkish, that liquidity dries up. And when liquidity dries up, Bitcoin gets crushed. This is exactly what we're seeing right now. The Fed's messaging has been unclear. Inflation is stickier than expected. Interest rates might stay higher for longer. And all of that uncertainty is poison for Bitcoin. Because here's the truth that a lot of crypto maximalists don't want to admit. Bitcoin is still a risk asset. It trades like a tech stock on steroids. When confidence is high, it soars. When fear creeps in, it crashes hard. Now contrast that with gold. Gold has been around for thousands of years. It survived empires, wars, economic collapses. It doesn't need Wi-Fi. It doesn't need electricity. It just sits there, shiny and stable, doing exactly what it's always done, being a store of value. And right now, with geopolitical tensions rising, with central banks around the world buying gold at record rates, with uncertainty everywhere you look, gold is thriving. Here's a number that might blow your mind. Central banks bought over 1,000 tons of gold last year. That's the second highest annual purchase on record. Countries like China, India, Russia, and Turkey are stacking gold like it's going out of style. And ask yourself, why would these governments, with access to the best economic intelligence on the planet, be hoarding gold? What do they know that the average person doesn't? And it's not just gold. The stock market is also benefiting from this crypto exodus, specifically the big tech names. Apple, Microsoft, Nvidia, Amazon. These giants are catching a huge inflow of capital because when investors want growth but don't want the extreme volatility of crypto, where do they go? They go to proven performers, companies with actual revenue, actual products, actual moats. Think about it this way. When you buy Bitcoin, you're betting on adoption, on sentiment, on future demand. When you buy Apple stock, you're buying a piece of a company that makes hundreds of billions of dollars every year selling products that people love. There's something tangible there, something real. And in times of uncertainty, investors crave that reality. Now here's where I need you to really pay attention, because this next part is where most people get it wrong. A lot of folks are looking at this Bitcoin crash and thinking it's time to buy the dip. They're saying a Bitcoin always comes back. This is just temporary. And look, historically, that's been true. Bitcoin has crashed before. It crashed in 2018. It crashed in 2022. Each time, it eventually recovered and went higher. So why wouldn't it do the same thing this time? Here's the uncomfortable truth. Past performance doesn't guarantee future results. I know that sounds like boring legal language, but it's critically important. The crypto market today is not the same as it was 5 years ago. The regulatory environment has changed, the institutional landscape has changed, the competition has changed, and most importantly, the narrative has changed. Bitcoin was supposed to be digital gold. It was supposed to be uncorrelated to traditional assets. It was supposed to be a hedge against inflation. But none of those things have held up. Bitcoin has traded almost perfectly in sync with tech stocks. It crashed during the last inflation spike instead of going up. And now, when there's actual fear in the market, people are running to real gold, not digital gold. This is a fundamental shift. And if you're not paying attention to it, you could be left holding the bag while everyone else moves on. But hold on. Before you think I'm just here to bash Bitcoin, let me give you the other side, because this story has a twist that changes everything. Despite the crash, despite the outflows, despite everything I just said, there's a massive amount of money still betting on Bitcoin long term. The Bitcoin ETFs that launched earlier this year have accumulated billions of dollars in assets. Major institutions like BlackRock and Fidelity are still building out their crypto infrastructure, and the underlying technology, the blockchain itself, continues to develop and improve. What does this tell us? It tells us that while short-term sentiment has soured, the long-term believers haven't given up. They're not selling in panic, they're holding. Some are even buying more at these lower prices. And historically, buying when there's blood in the streets has been one of the most profitable strategies in investing. So we've got two completely opposite narratives playing out at the same time. On one hand, retail investors and some institutions are fleeing to the safety of gold and stocks. On the other hand, the true believers are doubling down on crypto. Which side is right? Well, that depends entirely on your time horizon and your risk tolerance. If you need your money in the next year or two, Bitcoin is probably not the play. The volatility is just too extreme. You could easily see another 50% drop before any recovery. And if you can't stomach that, you'll panic sell at the bottom and lock in your losses. That's what happens to most people. They buy high on excitement and sell low on fear. It's a trap as old as markets themselves. But if you're thinking 10 years out, the calculation changes. Over a decade, Bitcoin has been one of the best performing assets in human history. Yes, it's crashed multiple times. Yes, it's volatile. But it's also gone from basically zero to tens of thousands of dollars. That kind of growth is unprecedented. And if even a fraction of the bull case plays out, if just a small percentage of global wealth flows into Bitcoin as a reserve asset, the prices we're seeing today will look like bargains. The problem is that most people can't think in decades. They think in days, in weeks, in months. They check their portfolios every morning. They stress about every dip. And that short-term thinking is exactly what causes them to lose money in assets like Bitcoin. Now, let me tell you about what I think is really happening here. And this is where the conspiracy-minded folks might get excited. But honestly, there's nothing conspiracy about it. It's just how markets work. When Bitcoin was pumping to new all-time highs, everyone wanted in. The demand was insane. Retail investors were buying at any price. But who was selling to them? The whales, the early adopters, the people who bought Bitcoin when it was under $1,000. They were taking profits, massive profits. And they were rotating that money into other assets, gold, real estate, stocks, things that are less volatile, things that let them sleep at night. This is wealth transfer in action. And it happens in every single market cycle. The patient, disciplined investors sell to the emotional, FOMO-driven investors. Then the market crashes. The emotional investors panic and sell at a loss. And the patient investors wait for the dust to settle before buying back in at lower prices. Rinse and repeat. If you want to be wealthy, you need to be on the right side of this trade. You need to be the patient one, not the panicked one. So what should you actually do with this information? Let me give you some practical thoughts. First, diversification is not just a buzzword, it's survival. If you're 100% in crypto right now, you're taking an enormous risk. A risk that most financial advisors would say is inappropriate for anyone who isn't already wealthy enough to lose it all. Spreading your money across different asset classes, stocks, bonds, gold, crypto, real estate, that's how you protect yourself against any single asset collapsing. Second, understand your own psychology. Are you the kind of person who can watch their portfolio drop 50% and not sell? Be honest with yourself, because if you're not, you shouldn't be in highly volatile assets. There's no shame in that. It's better to know your limits than to discover them during a panic crash. Third, pay attention to the macro environment. The Fed, inflation, interest rates, geopolitics. These things might seem boring compared to meme coins and NFTs, but they drive everything. They determine whether we're in a risk-on or risk-off environment, and that determines whether assets like Bitcoin thrive or dive. Fourth, ignore the noise. Social media is full of people who got lucky and think they're geniuses. It's full of influencers who make money by hyping coins they already own. The signal-to-noise ratio is terrible. Focus on first principles, focus on fundamentals, focus on building wealth over decades, not overnight. And fifth, always remember that opportunities come from chaos. When everyone is scared, when prices are crashing, when the headlines are doom and gloom, that's often the best time to buy, not the worst. But you can only take advantage of those opportunities if you have cash on hand. If you're fully invested all the time, you're never able to buy the dip. Keep some dry powder. Be ready to move when fear is at its peak. Now here's something I haven't mentioned yet, and it's perhaps the most important point of all. This rotation from Bitcoin to gold and stocks, it's not happening in isolation. It's part of a much larger trend. We're seeing a generational shift in how people think about wealth and security. The millennials and Gen Z who drove the crypto boom are getting older. They're buying houses, having kids, thinking about retirement. And when you have real responsibilities, real obligations, the appeal of gambling on volatile assets starts to fade. At the same time, the older generations who never understood crypto in the first place are feeling vindicated. They stuck with their boring index funds and their gold coins. And right now, those boring assets are winning. That doesn't mean crypto is dead. Far from it. But it does mean that the culture around investing is evolving. There's a maturity that comes with experience, a realization that getting rich slowly is actually getting rich. That boring is beautiful. That patience isn't just a virtue, it's a strategy. And I think we're seeing the first wave of that maturity wash over the crypto community. So where does this leave us? Bitcoin is down 25%, gold is at all-time highs, stocks are absorbing the outflows, and investors around the world are repositioning for what comes next. Is this the end of crypto? Absolutely not. Is this a reset, a reality check, a moment of reckoning? Absolutely yes. The investors who survive and thrive through this period will be the ones who stay informed, who stay calm, who think long-term, who diversify intelligently, who understand that markets move in cycles, who know that what goes down often comes back up, but also know that nothing is guaranteed. This is the game. This is wealth building. It's not easy. It's not comfortable. But it's the only game that matters if you want financial freedom. Now here's the part where I want to hear from you, because honestly, I'm curious. Where do you stand on all of this? Are you buying this Bitcoin dip? Are you rotating into gold and stocks? Are you just sitting on the sidelines waiting for clarity? Drop your answer in the comments right now. I read them all and I genuinely want to know what moves you're making. And if you found this breakdown helpful, if it made you think differently about your portfolio or your strategy, do me a huge favor. Share this video with someone who needs to hear it. Maybe a friend who went all in on crypto at the top, maybe a family member who keeps asking you about Bitcoin. Send them this link. It could legitimately help them avoid a costly mistake. Finally, if you're not subscribed yet, what are you waiting for? Hit that subscribe button, tap the notification bell, because we drop videos like this every single week. Deep dives into the financial world, analysis that actually helps you make smarter decisions, stories that you won't get anywhere else. Don't miss the next one. Thanks for watching until the very end. You're one of the rare ones, the ones who actually finish videos, the ones who take their financial education seriously. That puts you ahead of 90% of people out there. Remember that, and I'll see you in the next one.